Winston and Felix here with a quick market roundup. What to expect for next week? What the heck happened last weekend? He's back there wearing his seatbelt so he can't sit up. He looks a little bit grumpy. But we're going to go up a lovely mountain here in a second, so we're going to have some fun. So what actually happened? Well, sentiment, pretty bearish. Right, the 10-year Treasury yield has risen for 11 weeks in a row. What does that mean? Well, 10-year Treasuries are considered to be risk-free. We assume the US government's going to pay us. Big assumption. And therefore, money will flow into Treasuries rather than into stocks, which are deemed, well, they're risky, right? They go up and down a lot more. So that's bad for the stock market side of things. That's one big factor. However, Goldman's is still warning that stocks are still pretty expensive, and they are. Forward PE is something like 15.6 or something, which is significantly above the levels of the bottom of any major bear market we've had in the last few decades. So what does that mean? Well, retail is out. Retail money in the market is now below March 2020 levels. And that's sad, really, really sad. It upsets me greatly, I must say. Winston, you feel upset about it? Not too upset about it. Why? Because it just means that they bought the rally, they sold somewhere nearish the top, they are out, they've lost lots of money, they're despondent, they think the stock market is a manipulated, horrible thing, and they've lost a lot of their hard-earned money, rather than riding the waves, buying through the dip of the market, and coming out smelling of roses, or in Winston's case, of other things that he rolls in. So that's really quite upsetting, I think, and I'm trying to do my best to kind of educate people to not do that. And I know psychologically it's hard to do. It's hard not to sell when you're down 30, 40, 50, even 70, 80%. Like I see some growth investors. But think about like what's going on here. So track the core measures of your stocks. Track ROIC, track earnings per share, track their balance sheet. How much cash have they got? What's their cash burn rate if they're a growth stock? Track their gross margins. You want all of these things to be improving quarter on quarter. And if you know that, you track that, and you got to write it down because you'll forget, then you're going to be more confident in that. There's a great website actually called ROIC.ai, ROIC.ai, that gives you a lot of the historic data for free. Really brilliant resource. Do that. Really, literally sit down today, pen and paper, and do that. But what are we expecting here for the near term? So institutional fund flows, hedge fund flows are negative still, money flowing out, but not as drastically as we've seen in the past. Put call ratios are up in the moon somewhere. What does that mean? It means a lot of people are buying insurance now for a stock market crash. You're kind of thinking, shouldn't you have done that a few months back? You should buy insurance when the market's doing well, not when the market's already tanked a lot. So it's a little bit of an odd thing to do. But you know what people are like. It just shows that people are afraid that the JP Morgans might be right. We might be going down another 30% or something like that. Is it possible? Yes, I think it's possible if something breaks. That's what I'm sort of looking for. Is something going to break? Is, you know, someone like Credit Suisse going to default on something? I don't think they will. I think they'll get bailed out before they do. But if there is something in the financial sector specifically that gets affected by these much higher interest rates, you know, heading for 4.5% now. Here is the Tesla talking to me. Apologies for that. So all in all, my advice for the week, very simple. Don't have a talking car unless it's a Knight Rider car. Continue to buy good quality stocks at discount prices, but know that this is probably not the bottom of the market. So it's a gradual process. You never know the bottom of the market. So you just continually buy every week, every month, high quality stocks. You keep doing that for the rest of your life, you're going to do really, really well. And then for the traders out there, we did a long call on Saturday with the coaching community, and we talked a lot about like what's actually happening in the market and the positioning and so on. So I'm still broadly bearish on most titles, especially consumer products, retail and so on, because they've got overstock problems. The discounting is going to kick in. The strong US dollar is affecting a lot of spaces. We set up some trades on commodities and everything else. So we can diversify. We can continue to make money. I'm up 9% on the month so far, 109% on the year. So you can make money. You check out the links down below if you want to learn some more about our coaching and so on. But Winston and I are now urgently going to go up a lovely mountain here. Don't think you can really see it, but no, you can't. Lots of lovely vegetation. I'll take up some pictures up there, share them with you. I appreciate you watching, appreciate you tuning in, and see you on the next one.